Hey everybody, this is Andrea Jenson from the Cash Flow CFO, and you're listening to the Cash Flow CFO Podcast, the show that explores the financial side of running a business for people who want to maximize profitability and scale with confidence. If you want to make smart financial decisions based on data and put more of your hard-earned profits into your pocket, this is the podcast for you. This episode of the Cash Flow CFO podcast is brought to you by the Cash Flow CFO. Did you know that on average, business owners have up to 84% of their personal net worth tied up in their business? Our virtual CPAs and CFOs, as well as accounting and bookkeeping experts, empower business owners just like you to make big leaps that help them maximize profitability and scale with confidence. Visit thecashflowcfo.com for more information, and thank you for listening. The Cash Flow CFO is the entrepreneur's lifeline for cash management, for having strong financials, and really being in a position as a business owner to have somebody that can help you navigate all of the financial complexities of growing, scaling a company. Today, we're going to be talking about how to be financially ready. That's one of the things that we do well. We want to help business owners create an asset, which is their business. It's going to be the biggest asset that they own in their lifetime. It also has the biggest upside for return on that investment of time and energy and output. And we want that asset to be able at any point to be, ability to sell it if they want to leverage it for financing, and to use it to continue to provide a resource for themselves, for their employees, all the things that a successful business does.
Excellent. So I'm excited to dive in. I think, the first thing I would like to touch on, because I think this is kind of the most obvious and where a lot of our conversations have started. What do you see in terms of what are some of the top things that you are focused on in terms of helping your clients be procurement ready? Like what are those few basic things that they should be thinking about in order to successfully go after those large contracts with government agencies and large corporations?
Yes. Well, I think the most important thing to highlight here is that these are going to be large contracts. It's going to have a large impact on your business and your organization. So how do you be financially ready for something like that? Well, there's lots of different things that you can do. Some of them, all the way from the most basic, right, is having accurate, timely financial statements so that you know the health of your business. You know where you're at with, your sales goals, your revenue that's being collected and coming in the door, which equates to cash flow. It's understanding how you're spending that money when it comes into the business and having a plan. When you bring on a large contract, right, you're going to have a lot of delivery costs that go along with servicing that contract. And so to be financially ready, it's to, number one, know exactly where everything stands in the business before you bring those contracts in from a financial perspective. Number two, how are you going to service that contract once you are awarded it? And then number three, it's, there's a lot of things that we'll dive into that are more of the little nuts and bolts there. But, having a plan in place, being financially ready, having a line of credit is one example, right? So that if you have a slow paying customer, right, which some of these bigger clients are going to be, they're going to have longer terms before you receive that cash. So you're going to have to pay your team, but you're not going to collect that money. What is your plan? How are you financially ready to be able to absorb that into your company? So there's a lot of in between there, right? And I know we'll talk in more detail, Jean, but that's kind of just setting the stage and getting everybody to think about things in a way that, when you're financially ready and you're prepared to take these contracts on, the other thing is you can speak about the plan, right, to somebody who's considering awarding you, a big contract. If you can speak to it, that means you understand your numbers, you understand the flow of everything in your business, and you're going to sound, so much more prepared versus somebody else that's kind of just winging it and doesn't have all these pieces that we're going to talk about today in place.
Yeah, before we dive into some of the content, I think it would also be really important for people to understand. When I met you and I learned about your business, the fractional CFO, quite frankly, I wasn't even aware that that was a skill set that I needed. I have, a strong back office, so we have our bookkeeper and team. But can you just set the context? Like, what does a fractional CFO do? Why is it important to have someone like this on the team, especially as you're thinking about scaling and taking your business to the next level?
Yeah, absolutely. So I think before I dive into all of those specifics, I want to just kind of give a visual for everybody that's with us today, because there is a lot of confusion of what is a CFO, what do they do? So imagine this: you're the business owner, you're driving down the road in your car. Sitting in the front seat next to you is your CFO. They're looking out the front windshield and they're saying, all right, here's where we're going, here's how we're going to get there, and here's how we're going to be profitable. So they're forward facing. Sitting in your back seat is your bookkeeper and your tax preparer, and they're looking out the rear view window of the car. Everything in their viewpoint is historical. So the CFO is really the one that's creating the forward looking, here's how the plan is going to, be. We call it the profit roadmap in our business. And that's really just, having somebody that, if you've ever gone to your bookkeeper and said, can you prepare me a budget? And they just kind of look at you like a deer in the headlights. That's why, because their skill set is, I'm just looking at historical data and I'm putting it in its place so that when you review your P&L and your balance sheet, you know what happened, what the results were. Okay. So a CFO's responsibilities are creating that annual budget for the business based on what the business's growth goals are. So you're going to look at, where are you at now? What has your historical revenue been? And then what's the projected growth? And how are we going to achieve that? How many units of each item that I sell am I going to sell? And being able to have that forecast that goes along with the budget, and then reviewing that monthly. So once your bookkeeper produces the financial reports, you need to sit down with your CFO and review budget versus actual. Where did we hit the mark? Where did we not? What do we need to adjust? And you want to make sure that those financial statements are timely. So within the first 10 days of the new month, you should have all these reports and be reviewing them with your CFO so that you can make decisions that are not, very outdated and not going to have the impact and be trailing by several months. In addition to that, they're going to do calculate your burn rate. So that's a minimum of 90 days of cash that you would need in your business. If, God forbid, you didn't get any sales, you still need to keep the lights on, keep the doors open. What is that cash burn? And they're going to help you to understand that. In addition, they're going to be preparing a staff utilization schedule. So a staff utilization schedule is going to help you to understand the staffing needs of the business at the current volume, and whether you're overstaffed, understaffed, when is the right time to hire, who do you need to hire, how much can you afford to pay. Job costing, this is another big one. So looking at each of the jobs that you have going and understanding on a month-by-month basis where you're at with those. In addition to that, access to funding. So they're going to manage that relationship with your banker. And they're going to be the ones that are going to help to make sure that you're using any funds that you have with a line of credit, or, if you have any SBA money that people still have idle money left over, that they're looking at, how do I deploy this to get the biggest return on my money? Those are the types of things that your CFO is going to do for you.
I was on a call yesterday, and this is, I'm going to say, this is fairly new to me, even. And I've been in business for over 40 years. I have always relied very heavily on my bookkeeper, my accountant, my tax planner. And I thought, well, yes, I was definitely managing, I was doing the right thing. It was interesting because I was on a call yesterday and we were talking about, a person like yourself, this fractional CFO, and the role. And what my coach said to me, and just emphasizing the importance of this role is, a lot of people think that, oh, this is an extra nice to have. And so they're not really focused on it. They feel like, all right, if I have my, accountant, my bookkeeper, I'm good. I get my reports. I know what I'm doing. And what my coach said to me was, if you don't have a person like this, it could potentially be costing you money.
Absolutely.
And so maybe just to share with the group, and again, it's not about, I just think for small businesses, it's about up leveling and sharing this information so that people know what types of resources they need to have in their business if they are on that trajectory to getting those government contracts and getting those large corporate clients. Not having someone that understands this could be costing you in many ways. Can you talk a little bit about how that might show up for someone?
Sure, absolutely. Well, I think one of the biggest exposure risks that business owners face is, let's say you do win a contract and it's a sizable amount of a contract. If you don't have somebody that's doing job costing and managing, when you bid that job, you're putting together what you think it's going to cost you to deliver the service. And if you don't have somebody who's managing all of the expenses as they're incurred and putting them in a report for you to view, budget versus actual, you don't know if you're going to be profitable or if you're going to be, losing your shirt until the very end. And at that point, it's too late. You can't make any changes. And so, that's just one example, but also understanding, I can't stress enough what an amazing opportunity it is to win these types of awards, right? To get these contracts and have this, one deal could bring you in $100,000, let's just say, where if you sell, just like your normal sales cycle, it's going to take you a while to hit that 100,000, right? So I think where having a fractional CFO is somebody that's monitoring and understanding, how is this going to affect my operating cash flow? Who do I need to bring on in addition to the current team I have to fulfill this contract? And how am I paying for them? So they're making sure that the business is not, risking running out of cash. It's this great thing that they're getting this big contract, but then at the other side, if it's not managed properly and you don't have that CFO that's doing that, it could ruin your business, and it could, be the thing that undoes all the hard work that you've done over the years to get to the point where you can, take on those bigger contracts.
Yeah, agreed. I will tell you that, as somebody that's putting these deals together, what I see is having someone with your skill set on the team really allows you to have those conversations and be empowered when you are at the negotiating table with a government agency or a large corporation who often will try to get you to lower your price. And what I see happening is that, if a vendor does not have a real, and many vendors don't, let's just be clear, there's a lot of us who will outsource and say, all right, I'm going to give this information to my bookkeeper or someone on the team to create a budget. But without really having that understanding, it becomes difficult to negotiate in a situation where you're trying to onboard a new client and they're saying, we need you to sharpen your pencil. So that's the other area that I see, having, being empowered in this way and even bringing that person into the call. Because if you think about how large corporations work, they always have a chief financial officer who's sitting side by side with that business owner and who participates in those types of conversations.
Start scaling with confidence today. The Cash Flow CFO is a full-service accounting and fractional CFO firm. So it goes without saying that our financial experts are phenomenal at number crunching. But more than that, they are expert communicators who will connect all those complicated financial dots in a way that just makes sense. We don't wait in the wings and check in every so often either. With our boutique approach, we position ourselves front and center, watching over every dollar that comes in and out of your business as if it was our own. So if your business is making money and you're ready to take it to the next level, but you're not sure you completely understand your numbers, and you're looking for that trusted guide to help you build a roadmap to reach your financial goals, it sounds like we would be a great fit. Visit thecashflowcfo.com and let's get started empowering you to build and scale your business the way you want to today.
Let's just talk about some of the other things, because I think we kind of touched upon, the role of the fractional CFO, which, I can't emphasize, how much I've learned about it and how important I think it is, and what's some of the things that they can do. You mentioned staffing utilization. And in our conversations, you also mentioned creating KPIs around that. That is another next level step, quite frankly, that even in all the years that I've been in business, I never really understood the importance of doing that and how it can empower an entrepreneur to make those critical decisions about scaling. Can you talk a little bit about what that looks like and give maybe some examples? Like how do you determine when it's time to hire, and if that, how that hire is going to contribute to the business?
Absolutely. So a staff utilization schedule is where you're going to list all of your team members and you're going to put what percent of their role is revenue generating, client facing, right? And so that's going to give you, and then you plug in their salaries, you plug in their multiplier, which is how much you're marking up their salary for what you're billing it at. And that's going to tell you how much revenue you can generate with the existing team that you have. Now, when we marry that together with your cash flow forecast, then that's where you're able to see, okay, in months 1, 2, 3, this team fulfills, it matches, right? My revenue forecast matches the total revenue that I can generate based off my staff utilization schedule. Well, what happens when you say, okay, I'm going to increase by 5, 10, 15% over the next 3 months, just making up some numbers here, you're going to have to squeeze more staff utilization time out of either the existing staff that you have, which means you may go back and adjust their utilization percentages and say, okay, if you did some direct labor and indirect labor, I'm going to alter that so that now you're more direct labor versus the indirect. Or it's telling you, hey, it's time to hire. And then you look at, well, what position do I need based off of delivering what it is that I'm selling, right? And then from there, it's this game that you play. This is where your CFO comes in and works their magic, is you don't have to, as the business owner, sit down and figure all this out. That's what the CFO does for you, is they're creating all of these supporting schedules that are going to make the climb of revenue in your business much, much, much more enjoyable and palatable, because I'm sure we've all been there at some point. You have a huge spike in revenue and then you go, oh crap, how am I going to deliver on this? I need to hire, and you're scrambling. And it's yes, no business grows like this all the time, but the more you can manage this with your team and your labor force, the less stress you're going to experience as you continue to grow and scale your company.
Yeah, that is such great information. The other thing that that has interestingly come to my awareness is, what do you do with the money? And there's not a lot of really good, solid advice out there. I think a lot of entrepreneurs, that's an interesting problem to have. And from a cash flow perspective, sometimes you have cash, sometimes you don't. And so what are some of the ways that you are advising clients in terms of what to do with the money?
Yeah, that's a great question. So there's two parts to that answer. Number one is, this is where it's so important to have that forecast and the budget, because depending on your business, you may have seasonality. You may have, a time that your customers just aren't buying as much, and you're still going to have incur expenses. So we want to look at, what are my cash needs over the next 12 to 18 months, and have that rolling always cash flow forecast, so that you're putting money aside for the times are going to be a little bit leaner in your business based on your business model and the industry that you're in. So that's number one. Number two is, once you've gotten that piece in and you say, okay, I still have money that's left over. When we talk with our clients, we're talking about some big bucket allocations. And so I'll walk you through those, Jean, and for everybody that's listening. For every dollar in revenue that you bring in, it equals 100%, let's just say. And that 100% needs to get split up over four big buckets in your business. So the first one is cost of goods sold, or for our service-based businesses, cost of revenue. But for simplicity, I'll stick with cost of goods sold. General and administrative expenses, marketing expenses, and profit. And the reason that we lump profit in there is because profit that you see on your P&L is not actually profit that you see in your bank account all the time, right? That's money that, based off your business model and operating, that's how much you've created in profit. But it still needs to be, further planned out, because that profit number you see on your P&L is servicing any existing debt that the business has. It's paying income taxes. It's investing back into the growth of the business, and it's paying, part of that owner's compensation, whether that's dividends, distributions, that kind of thing. So those are four big things that your profit has to take care of. And so we when we look at the dollar equaling 100%, we're going to give a percentage to each of those buckets. Now, when you get to the point where you're looking at your profit, it's doing all the work it needs to do, and there's still money left over, then that's where we look at, okay, where am I reinvesting this back into growth? So the reason we have that come out of the profit bucket is so that it doesn't affect your operating cash flows, and it's not going to ruin all of the plans that you have in place with your cash flow projections and all the things. But it may be, okay, we have some money left over, and our growth goal, over the next quarter is 10%. And so that we know when we have a goal to increase revenue, we always reverse engineer that sales pipeline. So how many units of what it is that you're going to sell does that 10% represent? And then you say, okay, let's just say it's 10 units. And when I look at my sales funnel and I reverse engineer it, I know that, I've got 4 touch points in my sales funnel, and my conversion rates for each of those touch points is X. Okay, well, you work backwards until you get to how many leads do you need to buy in order for it to move through your sales funnel to hit those 10 units sold. And then how much is your customer acquisition rate? Now, I'm going down the rabbit hole, Jean, but this is really important so that you see how it all connects, and it takes the guesswork out of running a business. And when you have a fractional CFO that's doing this analysis for you, your job as the CEO is so much easier. So when you understand your customer acquisition cost and how much it costs to acquire a new lead, based off of, because we're tracking our marketing channels, right, everybody? So we know, maybe Facebook is better than Instagram, and maybe going to live events or sponsoring a booth is more a return on your investment. You're going to look at all that data and say, okay, go to my marketing team. Hey guys, I need 200 leads, and I can afford to spend, $6 per lead or $100 per lead, whatever it is. Now everybody in the company has a clear KPI of what success looks like. And nobody's saying, hey, I feel like you're just not doing a good job. No, hey, the numbers are telling me this. How do I help you to meet the numbers? So that's how you manage your business, through KPIs. And you're able to dissect all the levers in your business model so that you can get what we call predictable profits.
You want to know something? And I hope everybody, on the call is having this aha moment. I will tell you that, when I was, just starting out in business, and even today, thinking in terms of, we have a multi-7-figure business, and I'm like, okay, I want to grow that business. And so my brain can only think of the growth based on what I know, based on what's surrounding me. And so having a model like you just talked about, really the sky's the limit. And that's the beautiful thing. And I want all the entrepreneurs on the line to really understand this, because I feel like once you peeled back the layers and said, and again, this is a conversation that I have with, my leadership team. And we said, okay, we're at $1 million as an example. And my brain can only think, well, getting to $1 million was hard. Like, all right, so how do we get to 2 million? It almost seemed like, oh, wow, that's going to be a big leap. And what I realized is that I can predict to $50 to $60 million. And I will tell everyone on this call that in the government contracting space and in the corporate space, that is a real possibility for people in professional services. You don't have to be limited by where you are today when you have a model like this that will help you to plan out. If you said, listen, I want to get to, and this should be, quite frankly, the way a lot of us should be thinking, especially in this corporate and government space. There is no shortage of opportunities. What there is a shortage of is people that can do the work. Because again, you have to have all of these systems in place. You have to do all of this strategic planning. Some of the KPIs that Andrea was talking about in terms of like a staffing plan, but what's the difference between 10 people and 100 people? Zero. There is no difference. It's about strategic planning and resources. I think this is also an important conversation when you're, even going to the bank, right? I mean, the more information you have, you're just empowered to go after these larger contracts. So I just want to emphasize how important it is to start shifting our thinking beyond access to capital, which means, I'm going to go to the bank and I'm going to ask them for some money to finance my government contracts. This is a whole different level of strategic planning, scaling, and growth. All right. The other thing I want to just highlight, Andrea, that you said, which is really important, the buckets. And, this is new for a lot of people. So I just want to kind of re-emphasize this. This might be something that you all can start taking away and talking to your current financial team about. One of the things that I think was very important that Andrea talked about was that 10-day window. So if you closed your books on March 30th, by no later than April 10th, you should have a monthly report that at least provides you with the basic information. And I'm just reminding you all of this because we see a lot of clients who are not set up this way. So this might be something that you can all take away from. The other area that I just wanted to highlight for everyone is the profit piece, what to do with the profits. And what Andrea was talking about is that profit margin really needs to be large enough to cover your taxes, the owner's compensation, and potential reinvestment in the business. So that means, and again, just working with an expert, that those margins are large enough, because that's the other thing I see in the corporate and the government contracting space, that when you go to a government client, as an example, and you say, my profit margin is 10%, I can tell you right now, I'm working with a client that will say, that's too much. And so just to be able to say to them, this is not me putting this money in my pocket. This is where this is going. Out of that profit margin, what is it, Andrea, 30%, maybe even more, could potentially be going into taxes. And again, the owner's compensation is another piece of it that I like how you kind of laid out, because a lot of owners right now are either just taking money off the top or they're putting themselves on salary, which is really kind of, I would say, weighing down the business a little bit.
Thank you for listening. Don't forget to like and review, and we'll catch you on the next episode. If you're looking for more content or resources in the meantime, check out our website for information, blogs, and our I've Got a Spreadsheet for That series. That's thecashflowcfo.com. Again, thecashflowcfo.com. We can't wait to hear from you.